This is Katie. She's going to bring you a great lesson in cycle analysis looking at natural gas. Katie shows a bottoming condition in there, and she looks at bullish option strategies using the Tastyworks platform. And she gets great help from this from all of the work that she does looking at our cycle low timing tracker. And she's going to give you a little peek at that also. So in this case, we're looking at a potential bullish setup and how she would approach that. So Katie, show them.
Hi, this is Katie with askSlim. You're looking at our cycle low timing tracker. It's a tool that our members use to identify possible opportunities setting up, going into, and coming out of cycle bottoming time periods of the symbols on our focus list. The cycle low timing tracker covers both the intermediate and short-term time frames. The symbol that I want to talk about today is natural gas futures /NG, found here and here on the cycle low timing tracker. Now, the first box is where we put symbols that are in their cycle timing windows, whether on the weekly chart or on the daily chart. /NG is in its cycle timing window on the weekly chart, and I'll be showing you that shortly. These colored squares next to the symbol are an at-a-glance visual indication of a combination of momentum and cycle phasing conditions in each symbol. The first square is for the intermediate term and the second square is short term. So while these are dynamic, this green square next to natural gas futures is telling us that intermediate term conditions currently are looking positive, and the yellow square is telling us that the short-term conditions are more neutral. /NG is also found over here in the In Sync box. When a symbol appears in this box, it's letting us know that the current daily cycle ends at a period of time within the weekly cycle timing window. Therefore, the daily cycle low and the weekly cycle low are expected to sync up. This situation has the potential to set up some very lucrative opportunities. Let's go over to the chart and I'll show you how this works. This is a 5-year weekly chart of natural gas futures. We have a large dominant 54-bar cycle that is broken down into minor half cycles and minor quarter cycles. Let me just trace out this latest part. Now we moved up sharply in the rising phase of this new cycle. We retraced into the minor quarter cycle, and then we moved up again. Now we're currently retracing into the minor half cycle. We have these blue vertical dashed lines that form the weekly cycle timing window. They're a period of time around this ideal cycle low, when we expect this minor half cycle and minor quarter cycle to form the low, and then for natural gas to begin moving up into this next rising phase. Now that period of time is from September 5th to October 14th. Momentum on our weekly charts is represented with our proprietary reversal scout. That's this green and purple ribbon on the chart. Notice how it's green in the rising phase here, and it turns purple shortly after the peaks form. We currently have a reversal scout that is showing negative momentum, so we would like for that to turn positive as we begin this new rising phase. So our projection is for natural gas to get up perhaps as high as this 9.5 area in the second minor half cycle as that larger, more dominant cycle begins to exert some downward. Switching over to the daily chart, we have a dominant 70-bar cycle that is broken into minor half cycles, and we are late in both of those. So we have a daily cycle timing window that is coming up between October 4th and October 13th. Those dates fit within the cycle timing window that I just spoke about on the weekly chart, and that is why /NG is found in the In Sync box on the cycle low timing tracker. Now, momentum on the daily chart is negative with both the reversal scout as well as the slim ribbon, which is another proprietary momentum indicator that turns the candles red, green, or gray depending on momentum conditions. We'd like to see those momentum indicators begin to neutralize and turn positive as we start the rising phase of this next cycle, which corresponds to the rising phase of the second minor half cycle on the weekly chart. So what we're looking for here is for natural gas to just chop around in here or move lower into the bottom of this support zone as we make this cycle low. The bottom of the support zone is at about 7. We want to see that hold and then for natural gas to start moving back up. We would watch the lower time frames to give us some indication of the momentum shift we're looking for. Currently, both our 2-hour and 15-minute charts are showing negative momentum. Let's go over to Tastyworks quickly and see about some option strategies that we could set up. These are the available expiration cycles in natural gas futures. I'm looking at the November 25th expiration cycle because this is not a setup for right now. We're expecting the cycle low in natural gas futures in a week or two. We want to see /NG begin to move through the bottoming phases on the cycle low timing tracker and for momentum to neutralize and turn positive. So at that time, the November 25th expiration might be around 50 days to expiration point. So implied volatility is high in here. It's 100.2% with an IV rank of 64.9. That high implied volatility leads us toward short premium strategies because those strategies will benefit by a vol contraction that could come as natural gas moves higher. Looking at this option chain, the bottom of our support zone was at about 7. Now, there was also a 78.6% fib level at 6.17. However, if natural gas retraces that far, then I'd suggest being much more cautious about a long side setup. For demonstration purposes, let's say that natural gas holds the support zone above 7 and begins to move up and improve momentum on the lower time frames. We could sell a put at that 7 strike. This is showing a credit collected of 0.796. Now, since the notional on natural gas is 10,000, the credit collected is really $7,950. Now, this uses greater than $10,000 of buying power. If you'd prefer to use less buying power and/or you prefer a defined risk trade, you could go for a short put spread. Now, you can make the spread as wide as fits your account size and risk tolerance. For demonstration purposes, I'll buy the 6.9 strike to define the risk. That's a 10-cent wide spread. But remember that the notional is $10,000, so that means that a 10-cent wide spread is actually worth $1,000. So the credit collected here is 0.052, that's $520. Because the spread is worth $1,000, that means your max loss is the width of the spread minus the credit collected. So if your max profit is $550, your max loss is $440, and that is also going to be your capital requirement to put on the trade. So again, this is not a trade to set up today because we don't know yet how far natural gas is going to retrace into that timing window. So let's keep an eye on the natural gas chart. To follow our options trade ideas and use our cycle low timing tracker and other tools, please come visit our website at askSlim.com.